One screen's telling me yes, the other's telling me no. Happy days. Thank you, Sam. Much appreciated. My absolute saviour. No question. G'day, Paul P. How you doing, mate? Getting funny things over here on my other screen. You're not seeing that, however. Wonder how your week's going, guys. Not there's many of us in the room at the moment. Everyone's having a little bit of a sabbatical or something, are they? I don't know. We'll find out. Frustrating week for me thus far, I've got to say. The daily chart's not giving me anything at all. Really, I'm getting entered. I'm not getting TP1s. Fortunately, I'm being defensive and moving my stops to entry, so not getting bitten too much. But yeah, finding it really, really difficult to get some follow through. I'll have a look at where I'm up to in just a tick. I've only got one order in the market at the or one trade in the market at the moment, Euro Kiwi. We'll have a look at that and other things as the day progresses. I will, of course, now have a look at the pound versus the dollar. Let's do that. Yesterday was a loser, as you can see. I donated $33 to the brokers. They can have a drink on that. I'd like to get some back, and a lot more than that, I've got to say. But let's see how we go. Righto, we've got a range from the 0200 bar, so the low is going to be down here, where yesterday's midpoint was. Amazing how often that happens, actually. And the high is going to be where the current bar's high is, maybe higher. Midpoint at this stage will be, what's the low there? 18. Stop clicking. My finger's doing things it shouldn't do. The low is 1866 or 11866. And sorry, I just got a message that I had to have a look at. And the high is going to change, obviously. So we'll just rest on that one until we get something that means high. Let's say it's 1935, shall we? Shall we pick 1935? Where's that? No, let's pick 1942, just because we can. If it was 1942, what happened in 1942? War. We're in war. Yeah. We're in war now. Some people were actually speculating that this what do they call those things that drop out of the sky? Missile that landed in Poland was going to start World War III. Goodness gracious me. I don't know whether the press around the world is presenting that face, but that's exactly what I saw on Australian media overnight. What? Really? That serious? But it appears that was a mistake by Ukraine. Not a mistake per se, but a aerial thing gone wrong. What have we got left? Less than a minute. So let's say our high is going to be 1940 at this stage, which just looks like there. 1938, in fact, unless it goes higher. So 1938 from 1866 would be 70 pips, right? Therefore, our midpoint would be 119.01, which is pretty much where I was, right? There-ish. Let's see if this closes where it is. What did I say? 38, 37, 38, yes. Righto, very close. And we'll be going short, obviously, if we get the high here. I don't see anybody in the waiting room. I don't know why that happens once we start. Is that because there's no one in the waiting room, Sam? Or is that because I'm not seeing them? Righto, there we go. So the high is 119.38, as I said. So makes our midpoint 1.1901. I don't think that's a wise thing to do. Put an entry at 1.1901 short. Yet, I'll follow the rules of the system until proven wrong. Yeah, but I don't see them, Sam. I don't see anybody in the waiting. All I see, I'm looking at participants, and there's only you, myself, and Paul P. That doesn't kind of make sense to me, but that's what I'm saying. Okay, so let's place this order. 1.1901. Again, I'm sure Paul P, you don't want to hear me say this. Minimum risk, right? If anything, 1.1901 is the entry. The stop loss is 1.1942. There's Sui. So there is someone in the waiting room. 1.1942. And our take profit will be 2.5 times that. So that's being the risk is 01 to 42, 31 pips times 2.5. 62 and let's say 15 would be 77. So our profit's going to be 77 pips below there. All we need to do is put 77 into there if we've got the trade manager. And that's exactly what we'll do. TP1 will be at 1.1866. And as always, it is a bit of a misnomer because it is not profit taking. It is simply moving our stops to entry. Maybe you come up with a better way, guys. I'm more than happy to hear that if you come up with a better way. And look, at the moment, I've got to say, if you look at yesterday, which was an entry short here, and I think we got taken in on this one, didn't quite hit our TP1, which was very, very close to where it was. So maybe we just need to cut that down to 0.9 to 1 or something like that. Maybe that's the way to go. I mean, that doesn't happen all the time, but it does happen. So we need to monitor that. And if it proves that doesn't look right, does it? A little halfway. 66 to 42. You've got that wrong. 34 plus 42 is 76. So 38 from there is 04. No wonder it's wrong. Going to have to change that. Modify. I'll have to delete it. Sorry. Let's try again. Okay, 1.1903 is going to be the entry, not 0103. And the stop loss will be the same, 1.1942. And take profit pips was 03 from 66 is 34, 37. 74 and 18 is 92. How did all these people just come into the room? Oh, that's Ash. Okay, got it. I didn't let them in. I'm a bad driver, right? What did I say that was? 03 to 66 is 34, 37. So 74 plus 18 is 92 pips. That's going to be our take profit, right? 92. TP1, geez, I'll get there eventually. TP1 will be 1.1866. And we will do nothing there except move our stops to entry. TP2 doesn't exist. It's a sell order. And let's press OK. Maybe a little bit ambitious, but if this does reverse the recent, can you call it momentum? I suppose you can. It's very slow, I've got to say. And that's true of a lot of these currency pairs at the moment. They continue to rise, but they rise in a very, very slow fashion. And I'm finding it extremely frustrating. However, it is what it is. Righto, so you've got the parameters around that now. It only took about 7 minutes, maybe 10 minutes. But the entry is at 1.1903. The stop loss is at 39 pips above there, so 1.1942. And we're going to take stops to entry at 1.1866. I think that's right. Goodness gracious, Ignatius, that took ages. Righto, the only order or the only trade that I'm in is Euro Kiwi at the moment, and Euro Kiwi is pretty much on line ball. Now, this was one of my trades of the week. I think Pound Aussie was my trade of the week, and I'll get to that in just a tick. This was one of them, however, based on what? Oh, the bounce off here, and did we really get a lower high? Let me consult my notes back to Monday. No, it was just a watch listing. That CAD yen euro CAD. Why did I say pound? Pound Aussie was game changing. Plus, got it. Sorry, it's been a very busy week for me, and I'm finding it difficult to catch up. So we're pretty much bang on entry. We didn't quite make TP1, and this is the frustrating part of this week. And I want to talk about this actually, because I think the smaller timeframes should be doing okay, especially on the slingshot system. But the daily chart is really giving me frustration, because not quite even getting to the obvious support level and then reversing. That's frustrating. If we got to the obvious support level, we've already got money in the bank, right? But it's not happening. And as I say, smaller timeframes, if you can pick the entry up, we're getting the direction right, get some profit before there, right? Happy days. But you've got to go through all of this pain of the retracement, and then you go into a psychological barrier that says, oh, have I actually got this right, or have I got this wrong? And then you look at the fundamental, you go all over the place. So you really don't want that to happen. TP1 would be beautiful, then you can just relax. And that's just not happening at the moment on the daily chart. So I'm having to do far more work than I would normally like to do. And that includes moving stops to entry, which I have done on Pound Aussie here, right? We did get TP1 on that, so you could have made money out of it. That's okay, but only barely, because TP1 was kind of right where the line is, and then immediate retracement, immediate reversal, in fact, and unexpectedly challenging that reversal bar. Didn't expect that to happen. Maybe that's the reversal bar, or maybe it just goes in the opposite direction. But, you know, the directional bias is absolutely glorious. You know, we're getting excellent signals, double tops, lower high, lower low, lower low, but the market's just simply not giving us follow through, and it's very, very frustrating. However, as I said, it's maybe the smaller timeframes are producing far better results. Now, I'm still sweating on Pound Aussie, having now been out of it, because TP1 was hit, stop loss to entry, out. I suppose that's better than having no stop loss to entry and getting a loss. So we can look at it that way. I also got into Aussie yen earlier in the week, and that came straight back on me as well. I know this is a mess, this chart, and really, I got into that last Friday, and I've got to be absolutely upfront with you. It's because I saw an alert come across my desk that said something like, and Ash will pick me up on this, it was probably complete BS. It said something to the effect that Xi Jinping was happy to go into a war situation. That's what I saw. And I thought, oh, okay, this looks like it could go lower. Let's have a speculator on the back of that news. It must have been BS, because I've never, if that was the case, then Aussie yen should be down here somewhere or even further, but it isn't. And I got out of that as it came back against me. Trapped in this wedge now, so impossible to tell where it goes next. False break either way gets me interested, but until then, no. I'm still waiting on Euro Aussie. Euro Aussie, same thing. I thought this was a a golden opportunity to get short Euro Aussie, but not exactly the same as applied. Got a little bit of a sell-off after this bar on the weekly chart, but pull straight back and we're at entry once again. This is a theme that's just continuing. And as I said, very, very frustrating. It's hard to bank money on the bigger time frames at the moment. I wish I had the opportunity or the time to get into the smaller time frames, because I think that's where the cash is right now. Anyway, I'm still waiting on that. I'm still waiting on a few other things. The indices really, really peed off that I didn't buy silver down here. But, you know, it is what it is. But now I'm waiting for silver to come back, and hopefully we can catch it if it does sell off down to here. Lots of questions at the moment and very little answers. We have gone into consolidation in the last few days. The day, as I said, the daily charts are pretty tough to trade. I'll just handle that, and my frustrations will be brought out on the bar tomorrow evening at the new Norfolk Hotel. Until then, we'll just have to put up with it. It's as simple as that. Ash, how are you going, buddy? How's
I'm all right, mate.
How's the little time frames working? Because the big ones aren't working for me.
Yeah, just interesting what you're saying about that. I think it's been a tough week this week, and in a way, it was probably expected because of the data that we've had. You know, we've had so much data this week that is significant. The pound, I think, most significantly, we saw a huge jump again in CPI data. You know, really sort of beating expectations, and yet the pound didn't rally significantly, particularly against the euro. And in fact, the euro started to move up against it, and then the pound sort of like started to fight back a little bit. But I think in a way, either today or tomorrow is probably going to be the move of the week, because you know, as we wait for the data and digest the data, then you know, Friday's really the kind of free day. And it makes it difficult, you know. It has made it difficult because you're looking for follow through, but how do you get follow through on something which is so data dependent, and the next day is providing you new data, and it's one of those things that if that data doesn't go in your favor, then inevitably the charts are going to come back at you. We just had one of those weeks where there's been balance, and this is, you know, if we think about sort of, you know, what you say about the trend is just the next is the road to the next channel or the next range.
Next range. Yep.
The next range.
Well, the next range. Yep.
In some respects, you know, to kind of like have that roadmap, you've got to have something relatively shocking, you know, nothing sort of like crazy, but relatively unexpected and relatively significant when it comes back to how the central bank are going to read it. And we haven't really had that this week. You know, the only one bit of movement which was swallowed up pretty quickly was the missile that was launched to Ukraine and got shot down, and it landed on the Polish border, which is just inside the Polish border, which is a NATO country. So that did send the markets a little bit lower for a period, but a very short period, you know. So the market's a little bit tetchy, but it wasn't on anything fundamental. It wasn't on anything data dependent. It was just a news piece, which, you know, you can't really do anything about those things. So let me just show you some of the things that I'm looking at.
So have you found it difficult on small time frames as well?
Yes, I have, and I'll show you what I've kind of done about it. Okay, just send that. Right, let me share my screen, and I'll show you what I've done about it. And it's really what I always kind of do, really.
So you've had to work on anticipating, you're telling me you've had to work hard with hedges.
With hedges. Do you know what? I did do a little bit of hedging, but I'm not hedging now because I think that there might well be a dip, and what I'm effectively saying is that the hedge will come into play if it has to. But at this stage, I guess what I'm sort of saying to myself is that I just don't know when the timing is going to come. So I've got this short up here, and I added to it down here. And I have got a short a lot lower as well, and I'll show you that in a moment. But really, what I normally would do in this situation is be hedging to the upside to cover the short on the downside. But I think there's a little bit of movement to the downside coming. It's got to get through these pivots, but it's it hasn't really respected anything over the course of the last week. Look at this; it's been up and down and up and down. So what we've kind of seen is that there's not really there's the other position I've got down there, and I'm just leaving that one be at the minute. But what we've really got is this range kind of going on, which is why I took this trade, because it was at the top of the range. So I thought I'd come down and maybe sort of test this level. This take profit was in place, but it didn't quite get me closed, because when the market kind of came up, we got this belt hold, and it didn't quite come through my position. But I still think that area could be retested. I don't think that's a decent enough test, really. And also, because we are in a range, as you said earlier, the range could go either way. And it's difficult to know exactly where the pattern is, because there's a few different ones here, but I think it's probably here. I think that's what we're probably looking at, which would lead me down here. But the reason I've got my take profit where it is because there's also maybe a trend line kind of coming up there. There's one lower as well. So I don't want to get kind of too ahead of myself and try and aim too low. I might even end up having to move this up a little bit. But I am looking for this just to come to the bottom of the range, because that's what we are, and this is the thing. It's recognizing what the current dynamic is. Are we range bound at this moment, or are we likely to trend? And if you look at the data, we've got a budget due today, and the budget is probably going to be relatively negative. It's going to be an austerity budget, really, and that's not really going to be good for stocks. If they're sort of cutting back on spending, that won't really be that good for stocks. So I do see this market coming lower, which is one of the reasons I'm okay with holding this down here, because I think it will ultimately come down there. But on the way, I'll see if I can make a little bit of money. But if it does pop up, it's got to close up here, and then I will hedge the position. But that'll only suggest to me that we are going to there. So, I'll hedge it for maybe 1.5% sort of like, gain in the FTSE, but then I'll be looking for the short again. And I'll probably hold on to that one to see if, I can get some sort of aggregated close on the first position. But it's, I just think that there's too much in the way for this market to be at its highs and going through them. I think that this is going to take another dip before we really start to see this thing take off. And if I consider what happened with the price action on the way up, and off the back of slightly weaker CPI, slightly weaker PPI now, and slightly weaker jobs data, it's still only slightly weaker. I still think there's some really tricky times ahead. The austerity budget today might provide some downside. That might be sort of like the trigger for some downside. We've got the inflation data yesterday from the United Kingdom was pretty bad. In as much that it was very, very high.
11.1 or something, was it?
11.1, yeah. It's just not so good. It's a really bad thing. We had the monetary policy hearings as well. So retail sales from the United States was very, very good. So that again puts a bit of a headache for the Fed, because they're going, well, the consumer's still performing. So nothing is moving in tandem right now. So there's inevitably going to be a few question marks around things. So I still think that there's some downside coming for the FTSE and for gold and for the euro and for everything against the dollar. If you look at the dollar yen as an example, it would suggest to me that we are at a level of support right along here. And there's a pretty decent chance that this dollar yen starts to rally. Now, it could come a little bit lower. But if we were looking for the long, and this bar doesn't usually be left unanswered. You know, bars like that tend to be sort of questioned whether there is a sell-off. You know, I don't know how deeply into it, but we haven't gone anywhere into this first bar here. So that would suggest to me that at least a rally possibly to this point here, which okay, we might have had once, but there's almost too much still in the balance for the dollar not to have another push to the upside before either a failure or a resumption of trend. You know, I don't
underlines
think
exactly what you said before, though, doesn't it? If you're looking at that chart, and I said it earlier myself, pretty much. Fundamental announcement made that move.
Yes.
And now we're waiting for something else because we're parked, right? We're absolutely parked, waiting for the next one.
Well, we are, mate. And do you know what, though? The other aspect of this is that if this fundamental move, if the fundamental announcement down here suggests that the Fed go to 0.5 next time, is this the price at 0.5? Or is 0.5 actually a little bit lower? You know, people are sort of, or are people, what are people actually starting to build a position for next year, for the next 12 months? And I suspect that that's sort of like something to do with it. But I still think that there's probably, I mean, you know, Jerome Powell has said it, and many of the Fed officials have said it. And we've got some more speakers today that they may well slow the interest rate pace, but it doesn't mean that they're going to stop quite where they said they were going to stop. So there's a decent chance that that the Fed go just for that little bit longer, and that would probably provide us with some upside. Now, this is a daily chart, so if we then look at the 4 hour, don't have anything on the 4 hour. There's nothing to suggest that this is trending on the 4 hour. 1 hour, there's a higher low here, but that looks like it's being broken down. And obviously on the 15, you're going to get all sorts of stuff. But I think that the thing with this stuff is that if you have seen a move of that magnitude on the daily charts, you cannot then trade a 1 hour and a 15-minute chart. You've got to look for at least a 4 hour really to sort of like start to change the dynamic before you can then say we are starting to move to the upside, which brings the question of the smaller term timeframes into play. Because when I think about smaller term timeframes, I'm not really trading the smaller term timeframes. I'm trading the longer term timeframe direction with a smaller term timeframe entry. So if I look at this, the longer term timeframe direction to me has hit support. So I can't now trade I can't trade short from here with too much confidence. I'll be eking out a little bit. You know, the short for me is on this level here. You know, when this sort of like actually breaks through that trend line there, then I'm interested in the shorter term timeframes to come down. But until I see at least a 4 hour turnaround down here, the shorter term timeframes are completely redundant because, as I say, I'm not trading this lower. There's a double bottom there, and there's a level of support there. So I can't trade that one lower. I can't trade it higher until at least I get a 4 hour higher low. And then I go down the charts and I can see the same thing. The euro. Look at the euro. The euro on the upper time frames on this daily time frame has given us this higher low and a higher high. So you'd be looking for longer term time frame. So you look at this on a 4 hour and you get the higher high, but then there's no higher low. Well, I suppose you could argue that one is, but then you don't get the higher high. And now we're down here again. So we are basically in a range. And the only way then to trade it is to, as long as you recognize it, is to say, I'm trading from the bottom to the top until the range the range breaks. You know, the point is here that if you traded in this area here expecting a higher low, you've probably been stopped out, which is fine. It's not a problem because it did look like we're starting to trend again. But then when this happens, you're confirmed that this is in a range, and until it confirms it's not in a range by breaking the monthly pivot and holding, then the idea really is to get on the shorter term time frames. You know, that's not really a problem for this sort of chart. But I think you really have to go down the list.
Mate, sorry,
this is the euro. This is euro pound.
Okay, yeah, I'm going to say it's not euro dollar because
No, and the euro pound, by all intents and purposes, should be trading higher. But it's interesting because yesterday, in fact, just after the data was released, it started to rally. But inevitably, it comes down because CPI data coming out so strong from the UK suggests ball back in the Bank of England's court, and they should be doing something significant. So euro pound is lower, and I haven't looked through all of them, but I would suspect the pound's probably doing pretty well against everything, and the pound's up against the dollar. Obviously, the dollar's not doing
it's
so
been
well.
doing okay.
Up against the Swissy, it's up against the Aussie, it's up against the CAD. Looks like
That's the one that surprises me. It's up against the Aussie. As I said, I had a small sweet spot. It wasn't a great sweet spot for the Aussie this week, but they had employment figures today, which actually surprised. And I haven't had a look because it was expected that we would have worse than trend, if you like. And I think there's 4 months in a row where that unemployment figure has been coming down, down, down. And it went down again. It wasn't expected to do that. I haven't seen the Aussie. Well, if I have a look today, I suppose it did rally, but it's at the daily pivot at the moment.
Yeah, it did rally, and I think the only reason that the Aussie, I mean, look at the Aussie Kiwi was my weekly trade short, and so far it's working out. To be fair, it was also the weekly trade short last week, which wouldn't have worked out, but this week it's working out a bit better to this point. The interesting thing about the Aussie, and I think maybe the reason that the Aussie isn't starting to see a rally is that it's simply not its turn. And when it does become, when we kind of like get closer to maybe a more significant number for the Aussie being released, more like, I mean, the unemployment number is important, but it's the CPI data that seem to be sort of creating some sort of move right now. And of course, the speculation.
Yeah, because it's the buzzword, right? It's all about inflation.
Yeah, exactly, mate. And I think as long as we recognise that, then we're kind of okay. Now, why did I think there was CPI data from Europe this week? I can't see anything now. President Lagarde.
You guys had CPI. Canada had CPI, didn't they? I can't remember.
Oh, there is CPI. CPI year on year. Oh, sorry, it's today. Yeah. So it's today. We got in about an hour or so. We've got final CPI year on year from Europe.
Okay, that's
yellow folder, I don't know, and it's because it's a yellow folder. It's gone right under my eyes there. But at the start of the week, this is what I was looking at. Now that suggests that if that CPI data comes in strong, given the price action on the euro pound as an example, this is still in an uptrend at this particular point. There's the low there. There's the higher high from that point. Now we're waiting for the higher low. That suggests that this is a buying opportunity. And if that CPI, and this is what you need to follow through. The only way you're going to get follow through is if the data then matches what the speculators are guessing. Mm-hmm. So speculators guess down here that CPI comes in strong, then this starts to go to the upside. If the CPI data comes in line with expectation, we're probably left in the range. If it comes in lower than expectation, this is probably coming down. So the first thing to my mind to do is try and get into a trade long on the euro pound, and we're not too much because we've got to speculate, but we've got to get a setup. So what you're really after here is a technical setup which suggests other people believe the same as we do or I do, that the CPI is going to provide a trend. Now at this stage, that's not what the market is saying. At this stage, the market is saying, we don't believe the CPI data is going to provide a trend. So we can't do anything about this. This has got to provide us with something that backs up the theory. And it's not doing it. So really, what do you do? In my opinion, you can't trade it short because you could get a surprise to the upside. You can't trade it long because the technicals don't give you that opportunity. So you're effectively waiting. And I think that this is maybe the problem that you've possibly been encountering through some of these short-term timeframes this week. Is that the data's been expected. I mean, there's the interesting thing, and you know, this is where the technicals really do help, is that if you look at the euro dollar as an example, and go to the point where just before the data was released on Friday. We come in here, so we got sort of like maybe the euro dollar kind of coming up here. This was the data bar here, this one here, I think.
Yeah, it looks about right time-wise.
It looks about right, doesn't it? Yeah, that was the data bar there. Now it's 11th, yeah, Friday. So that was it there.
Well, it's actually Thursday, wasn't it?
Ah, it was Thursday.
Mm-hmm.
Okay, let's go back. Ah, no, but hold on.
You're talking about US CPI data, right?
I am talking about the CPI. Yes, yes.
Yeah, it was Thursday.
That was Thursday. Okay. So let's have a look at that then. Yeah, US CPI, got it. Okay. Thursday at 1:30. So I think 1:30, what's that now? That's the 10 o'clock bar. So we're 2 hours different. No, Thursday was the 10th. Oh, sorry, mate. Do you know what? I was reading MC4 time things wrong. That is the right bar.
That is the right bar, yeah.
That is the right bar. So so this is the bar. So now if we look at this in a bit more detail, then what we get is this horizontal level here, which was obviously broken through, and then this initial pullback. Now that initial pullback, if we sort of like look at this initial pullback here, and that's all you had. So what you know, to my mind, you're sort of like looking for it to come back and retest an area.
I'm going to say it's got no right to pull back only that far.
No, I think
it should be sent to the sin bin for doing that, right?
Yeah, well, this is the thing about such important data, though, isn't it? Is that that it doesn't tend to pull back quite as far as we would like. But to me, this isn't the entry. You know, you're guessing here. This is kind of this is in midair, but this is the entry because now you've got a higher high and a higher low. So there's the cycle. You know, from this, you don't know where the cycle's stopping. It does look like it's coming down. But when that one holds and you get this first high and high low, then you've got something. The problem with something like this is that it makes people very uncomfortable because this is it's come from all the way down there. But really, you know, if you've got a stop down there, then actually it's a really valid and good trade. And you've managed to wait for the data to come out. I think that this is the problem if you try and front run data. However, you can front run data if you get a signal like we saw on the FTSE, which I believe this was the data point here. You can front run it if you get a signal like this. And this is where the charts are always different. Look at that. This is 15 minutes before the data. That one closes, there's the data. So this one enabled you to get in before the data was released. And you're speculating here like you would be with anything else. But if you've got a stop somewhere that maybe down there, depending on what time frame you want to look at, maybe you probably want to look at on the dailies, maybe. Sorry, on the hourly. Let me just bring that back up again. Just so I can mark off where the bar was. It's here. And actually, that's where my take profit area is. But look at the line here. This is the
it's pretty cool.
It's beautiful. You know, that's the channel there. Then you get a burst up at the channel. 15 minutes before, you get a close that doesn't come back in. So that's a valid trade. That's a valid entry. You can take that, no problem at all, and just speculate that you're going to get a move. And of course, if you don't get it, you're going to get stopped out at a 1% or 0.5% or 30% loss. It's no big deal, but you get the opportunity to really sort of, have a go at the data release. And if we come back to the euro pound, because that's what this is really about, what this is saying is that we've got to wait for Exhibit A, which was the dollar, the euro dollar, because it's not giving us that sort of break of channel and 15 minutes. It doesn't look like we're anywhere near 15 minutes before. We're getting no speculation at this stage that the euro is going to provide us with some decent price action before that data is going to be released. So now we're sort of like back to Exhibit A, which is, as I say, it's the dollar. So we're really waiting for the euro dollar one we looked at. What we're waiting for is a break of this level and possibly a return back to there. And as scary as it might be for people, if the data is significant, the chances of it going through are pretty high. So I think there's different ways that we can approach news and data.
I'll just add one little disclaimer in there. I don't know, it's a waiver maybe. The problem with that is if the news is so dramatic, if you like, that the market shoots violently in one direction, the brokers won't allow you in until they're covered. So in other words, the spreads just go like that, right?
Yeah.
And that's the issue. If that wasn't the case, then trading the news would be so much simpler. It really would. And I've been in that situation before where I got slipped. Wow, I think it was like 64 pips or something like that on something versus the US dollar. I think it was the Aussie versus the US dollar, which, 64 pips is a lot.
Yes.
Right. And I got slipped that far. The market retraces 50%. And you're in all sorts of trouble.
Yeah,
what do you do
point, mate.
in that situation?
That's an interesting point. I mean, when it came down to the FTSE, that didn't happen on the FTSE. We didn't get that kind of slip, that wider spread thing. I think currencies are a little bit different, aren't they? But I appreciate what you're saying. I mean, I suspect there is probably some news you can do that with, and there's some news that will cause that kind of slippage. Because a CPI print is not, in a way, it's part of the picture. It isn't the picture. It's not the end sort of. It's not the full stop. So I don't know whether you'd get it so much on CPI. To be fair, I didn't check it on the euro dollar, but I wouldn't have thought you get it quite as much on a CPI print. But I do get your point.
It just depends on how big it is, and how big the differential is from the forecast, I guess, because that's when the market just goes nuts. Yes. And that's when it's really difficult.
Yeah.
And actually, we should try when we come back in the new year. I'll note that down, that we'll trade some news just for kicks,
Well, we'll have to be in the room at the same
time.
And
a few methods of doing it. Sorry?
We'll have to be in the room at the same time. That's the problem, isn't it? Because this one is Thursday. That was Thursday at 1:30 in UK time, where we're not on together.
But oftentimes, Mondays there won't be too much, I suppose, but Thursdays it could be.
Thursdays in the first hour. That's the problem. Most of the news is it's American stuff, so it's usually sort of in the afternoon my time. I mean, yesterday, what was yesterday? The CPI data for the UK. What time was that? That was at 7 a.m. I mean, it doesn't help us out really.
Okay, well, let me look at that. Let me look at some timings, see if we can actually trade the news.
Yeah, I mean, looking at that actually, so you know, if we sort of think about that, CPI data yesterday was the 16th, and that would have been at 9 o'clock on this.
And
There
my
we go.
reasoning for that is for no other reason than to see if it's actually possible to do it. Exactly the same as we're doing with the pound versus the dollar at open. Is it valid? You know, is it possible to make money from it? That's what I would.
Well, do you know the only thing
in.
is that you can't, I don't think you can purely rely on the charts. I think you've got to have an opinion about what the data point means, because CPI data yesterday from the UK, I think most people would say coming in at 11.1% would be bullish for the pound. And what happened was this drove the euro against the pound higher, meaning that this was the higher low, and people were sort of like, you know, potentially sort of like looking to make a lot of money. But the actual move by the end of the day was it was actually coming down, because that CPI data is relatively bullish, you know. But the reason that I think we saw the initial move was probably more to do with the euro than it was the pound in a way. I mean, I don't know. It'd be interesting to see how the pound reacted against something like the Aussie.
You see, there are ways to counter that. You see, if you are trading the news, and one of them would be to actually just buy into the market if you think that's going to be a buying opportunity. The news result is a buying opportunity. You just buy before the news, right? You just go in at market and buy, say, 1 minute before, and then have an alternate sell somewhere below where you think is a safe place, wherever that may be, after the news release. So, in other words, you're not going to suffer slippage if the market does go nuts long, because you're already there, you're already in the market. And if you're wrong, you're covered on the downside, and you won't get slipped into that. That's one method of doing it.
Yes. Yeah. Well, yeah. I mean, this is sort of I guess some of the issue is that you may presume that the market is going to do something. You know, you presume that data is going to take the market in a certain direction. It goes in that direction, so you think, hey, I've got it right, and then all of a sudden it kind of reverses. And I think some of the reason for that is that there's usually more behind these releases than we go and find out. We see the release and that's it. But actually, what people go in and they dig out the CPI and they see where the CPI is starting to, you know, maybe function in a better or worse way than others. You know, is it food? Is it energy costs that are going up?
It's a number, but there's a whole lot more to it.
Yeah. There's a lot more behind it.
Which sector has provided that? Yeah. 100%.
You know, and this is where, I'll tell you what, the FTSE's coming down a bit now. So let's see if we might well get some profit eventually. But yeah, it's a tricky one, mate. You know, how you sort of approach trading is, and I was talking to Paul about this earlier, because we're sort of doing an IFP this weekend, and and we're talking about the strategy, and you know, when you sort of like note down in your journal, you're going to sort of see some months which are just crazy good, and then months which aren't so good, and then months that are just out and out bad. Over the year, you're going to make money, but how do you smooth out those periods where it is crazy bad and recognize the change in dynamic, which means that your strategy is just not valid anymore? Because what you're saying
straight away, you have to be conservative. Once you recognize that you're in that phase, you have to be defensive. Rather than be on the attack, you know. And and the reverse happens. Once you recognize you're in that profit phase, then go hard.
Oh, mate, that's the key, isn't it? I mean, it's, you know, and actually when you say it like that, it sounds very, very simple. And actually it probably is. We probably overcomplicate things into a certain degree. But, you know, and this is back to really what George was saying about scaling in. Is to, you know, scaling in is a really good way to make money, but it's a challenge in itself, because you might well scale in only to find the market reverses and you've lost on both positions. You know, if you're scaling too early, let's say. You scale in and make the first one break even. No, no problem at all. But then you've kind of got a worse price on the second one. So there's that aspect to it. But you're absolutely right. Recognizing the dynamic of the market, recognizing the environment that the market is currently in, is pivotal, really, to sort of like how you make money, and making sure that you are allocating your cash correctly during that particular time. Because
I'm a classic example at the moment, because I cannot find any follow through on the daily charts. It's just not happening. But if I was trading on the 30-minute charts, I reckon I'd be doing just fine, because they're doing exactly as we say, where they're hitting the resistance and they're going to support. And that's kind of my ballpark. That's where I live. I'll show you an example of what I'm talking about, actually. Yeah,
let's have a look, mate. Because I tell you what, the other thing is that as this goes on, if we think about the dynamic of what's happened this year, we've had raging inflation. And that's not to put a lighter point on it as well. It's been raging. The inflation's been crazy bad, and central banks have had to shift. But inevitably, they all then start to come almost back into alignment again. So does that, it's those sort of the environments where one moves, then another, then moves again, which is what we saw with the dollar moving way against the yen, moving way against the euro, moving way against the pound. And actually, not really moving against the Kiwi, but still providing a decent trend. So you've got hyper strong dollar kind of going up. Now we're at the point where that dollar could well be peaking in its trajectory, but you've still got a little bit of catch up to play with the likes of the euro and the pound, but only a little bit. So because there's only a little bit of catch up now, dollars at 4%, pounds at 3%, euros at 2%, I think right now. So they've got a bit more to do, but it's not quite the same. Now the ECB are on the track. People know they're going to be at least going to raise interest rates. With the likes of when we saw it around about July, they were still really spouting a completely different song. So maybe that's the reason we're sort of now getting into this more rangy kind of market, and it could well be that 30-minute charts are better again.
Oh, look, 100%. Yet there's still frustration in that, because I was looking at this as we went into the show, and this is an absolute classic slingshot scenario where you've got a range, which is clear, this pennant. You've got a beautiful trade line, both resistance and support, and you've got a classic slingshot candle pattern sitting right there. That's already tested the daily pivots, been tested, retested. And any Swee, I reckon Swee traded this, right? She's not telling us. I reckon she would have entered above that bar right there and put a stop loss right there. Yet, it only went to the first, and this is your game, Ash, right? It went to the first contact and come straight back off it. So if there's a lesson for me right now, it's trade the 30-minute charts, trade my strategy, but get most of the profit off at first test, or close the trade, one or the other. You haven't got 1-to-1 there, but you've probably got, I don't know, 3/4 to 1 or something. What's wrong with that?
Oh, money's money, isn't it, mate? And as you say, the reason that probably did reverse there is that people were speculating that we're going to see different numbers from Australia. The numbers actually come in better than expected, and of course, people buy the Aussie again because they're like, "Oh, hold on a minute, this currency is not quite as weak as I thought." So what creates?
This is the euro.
That's the euro Aussie, isn't it? Oh, euro dollar.
No, euro dollar.
Euro dollar. Okay, so that may well have been because of the retail sales number. People are sort of, talking about retail sales and maybe coming in weaker than expected. It comes in stronger, so people buy the dollar up again, so the euro starts to fail. Now this is interesting because we're through this area and we're 10 minutes away. Are we 10 minutes away? No, we're not. We're an hour and 10 minutes away from final CPI year on year from Europe. So this becomes interesting. This to me is a buying opportunity, because if you do get a big number here, this is going to get some follow through, and you are at a retest level.
Well, as I say, this is classic slingshot scenario where you could have got into the market. The problem is with the slingshot scenario here, your stop loss is now right here. And as you say, if we do get follow through, we may also get retracement before that happens.
Yeah.
And that's the tricky part. It's all about where your stop loss is at the moment.
Yeah, because you'd want it at the low of that red bar, really.
Well, you'd either want it here, or even here, you know. How safe do you want to be?
Do you know what, mate? I wouldn't be overly safe in that respect, going too far down. And the reason for that is that I think if you traded 10 of these and one or two work out, I think you would sweep the market, no problem. I don't think it would be too bad. I think you're right. Going in the middle of the bar would be possibly a bit foolish, but going under the bar, just a standard stop under that. I think that's
your standard entry. That's your standard stop.
Yeah. I think that's okay, and if it loses, it loses. But I think I do, and this is where the money management comes in. If you risk 0.25% on this, and the CPI data is strong, you're going to make 1%, probably. You know, certainly on a small little bar like that, you'll probably make 1% without too many problems. And if you lose 1/4, wow, it's not a big deal. You know, you might make multiples of 1%. Because we, you know, at the end of the day, this is all guesswork. You know, we're not gambling, because we're sort of like we're putting the correct sort of the correct safety measures in place, and sort of realizing that this isn't a trade by trade industry, but it is still a guess. Everybody that's buying anything at any point is guessing to a degree.
And do you really want to buy this market? Do you really want to buy?
Well, now you ask a different question. Now that poses a different question. Absolutely right. Okay, so now when I look at it, and when you bring in the broader picture, what I would want is weaker CPI, and if I can get that, then I can get an entry with the resistance area, and potentially get some decent follow through to the downside, because you're absolutely right, mate. There's probably not a lot of room to the upside, or if there is, that number's got to be it's got to be really hot. You know, what if it comes in at 10.8 from 10.7? What if it comes in at 10.7? It's kind of all bets are off then, aren't they? In a way, for our explosive move to the upside. It's forecast to come in at 10.7.
And the previous, I mean, it's really not a place you want to buy this without something to say. Technically, I'm talking about. Forget the news. I really want a strong retest here on a daily chart, not even on a 4-hourly chart. I want it on a daily chart. This is okay. You can call that a retest, but it's consolidation at the end of the day.
Yeah.
Agreed. Then maybe we need. I don't know what we need here, frankly.
I'd want to see some downside. I'd want to see this sell off. I wouldn't want to buy it. I'm with you, mate. I wouldn't care what that number is.
This bar here is saying we've just got to consider shorts.
Yeah, for sure.
That's what it's saying.
Yeah, I totally agree. When the market's at resistance, to trade it long, that is gambling, in my opinion, because you're gambling that number is so outstanding that it's gonna really sort of like burst its way to the upside, and of course that can happen. But while the market's on resistance, what we should be considering is, do we have a short position to take? And right now we don't. We need to break back through the low of that triangle, give us the higher low, and then we can look to trade it. But you know, and I would trade that before the news if that was the picture, and see if the news helped me out. But if it's not, then I'll have to wait. You know, it's time to wait for the news and see if the news helps you out and gives you that picture.
And that's probably why we're seeing first contact, as you call it, the first level of resistance. The sellers come straight back in.
Yeah, because they know they've got a good sell price.
Yep, that's right.
You know, all they now need is
they know they're sitting here.
Yeah, they know they've got a good sell price. So now what they need is the data to help them out. And if it doesn't help them out, they won't care, because it's so high up here, it's worth the speculation.
Yeah, I agree.
So yeah, that's the read that I put on it anyway, mate. It's, you know, I think there's many things that you've got to consider when you sort of take a trade, and you know, I'd kind of love to get some of the gems that we talk about throughout the year into a book, because we
That'd be
probably
good,
sort of,
wouldn't it?
oh, it'd be brilliant. Yeah, I don't know.
Yeah,
We might need
so
to employ
sweet,
somebody.
sweet. You didn't take this long, obviously, on the euro versus the dollar. You're having an SH1T week. I'm
Sweet.
I'm not having a great couple of weeks, I've got to say, but yeah, no, of course.
Yeah, and this is
Look,
the thing, isn't it, Swee? Is that when you're doing badly, somebody be doing well, and when you're doing well, somebody doing badly. It's just about approach. It's just like sometimes our approaches work, and sometimes they don't. And it's just, we just got to get through it and recognize that they'll work again. They will come back again. It's just, you know, it's really all about sitting tight and being patient, and you know, trying to get around the frustration somehow.
yeah, just go out and kick the cat and you'll feel better. You're okay.
And I've
Just
kicked
kidding.
it so many times, I haven't got a cat
kidding.
anymore.
I honestly don't recommend animal violence or violence of any kind, to be fair.
Yeah, lives next door
Try-
now.
Put the rug over the clothesline and just bash it, something like that. You know. But I highly recommend that you do that before the weekend, because you don't want to go into the weekend from a psychological point of view. If you have had a bad week, you don't want to go into the weekend with that last thing in your mind. You really don't, because next week's another week. Just get it out, get it out of the system.
Yeah. Go to a what was it Rocky? Where did Rocky used to train? He used to go to a butcher's, didn't he? And
Oh yeah, pound the meat.
yeah, pound the carcasses.
Pound the meat. Yeah, there's probably a better way to put that.
That might help.
Well.
Yeah. Anyway, mate, we're pretty much on top of the hour. We got unless anybody else has got anything to add, by the way. I mean, if you guys have got anything to add and you want to come on, it's all good.
Yeah, you got a hot trade, guys, for us to follow.
Hot trade.
We need a hot trade to get Swee out of the SH1T for the week.
Yeah, do you know, I think the hot trade is just leave it alone this week. It was always going to be tough, mate.
I'm still keen. I'm really still keen.
Well, I think wait till tomorrow or wait till this afternoon, because, as I say, a lot of the stuff would have passed by then. You know, the problem we've got right now is that, you know, it would be maybe overstating it a little bit to suggest the market is like this caged animal waiting to go. But to a degree, I mean, it is caged. I don't know whether we're going to get any significant move this week or not, or you know, over the next couple of days. But we often do in something. See some kind of movement. So you know, I think there's opportunities there. I'm still a seller of the Nasdaq when that provides an opportunity. I'm a seller of the FTSE, obviously. I'm a seller of gold. Anything against the dollar. I'm interested in the dollar. I don't think it's turning around yet, but I think that within the course of the next month, the dollar's going to find a bottom, and all of a sudden we're going back up again. And okay, it's a bit of a guess, because I just think the market has misread the statement, and also
we said that on Monday, right? And I agree.
We said it on Monday,
100%.
yeah. And also, mate, do you know the other thing is, I don't think we've seen the pain really seen yet. I think that there's stuff to come. You know, with companies having to lay people off, which I know has started, but I don't think it's been anywhere near as significant as it could have been right now. I mean, how are we getting retail sales so positive in the environment that we're in? It's just it's crazy, really. You'd think that the walls would be collapsing around everybody's ears by now, but not the case. But I think it's coming.
Well, because Donald's running again, so everyone's buoyant. They've got the new president in their sights. Yeah.
Yeah, I don't know why that would make people feel too happy, but
well, maybe they're out buying safety helmets or something.
Yeah.
Maybe that's where the retail sales are coming from. But look, there's some excellent potential setups coming, and look, this could well be a classic short covering rally here. This is the Nasdaq, and they're all going to look the same, right? big one on silver, big one on that's gold. Silver's already come back off that support level,
Yeah,
or
as is
resistance level
copper.
rather. Yep, it's only got to get underneath this trend line, I reckon, and it becomes a real good sell. And even on the daily chart, if we get a retest of that weekly pivot tomorrow, maybe it's a good sell at the same time come Monday. But yeah, look, I'm 100% on board with that, mate. I think we haven't seen the end of the dollar rally, and we haven't seen the end of the, I'm not sure what to call it really, on the equity markets.
Stock market collapse. I think there's another one coming.
Collapse is that? Yeah, that's probably the word.
Yeah, I mean, you know, I still think that there's another. Those COVID highs, pre-COVID highs, it just seems like how can the market not test those levels? I mean, we got multiples that are way over. They were overvalued then, and now we've got a situation where they're overvalued in a high interest rate environment. It just doesn't seem right that we shouldn't
It's not
go.
logical. No, that's right.
No, it seems illogical. Exactly. I think coming to test those COVID highs, the pre-COVID highs, sorry, is maybe the way. And where your trend line is, that's where I'd be all over it. I'd be looking for shorts without any trouble there at all. And I'll probably just take them
not far
on.
away.
Yeah. Not too far away, no. A little bit to go, isn't it?
41.30. So say 41, yeah.
Yeah. Yeah. And what's it at? What's it at now? 39.75.
70s, yes.
Hmm.
Makes sense.
Yeah.
Makes perfect
So maybe
sense.
a little push up, but and we are in a particularly bullish period, but I just don't think stocks show any attractive solution to try and make the cash right now. So I still think there's another dip.
And to my mind, you've got to start thinking we're in a bullish period. WTF? We've got a war. We've had a missile land in a NATO country. We've got prices that are just absolutely going berserk through the roof. Inflation's out of control. Interest rates are going through the roof. Why are we so bullish at the moment? Doesn't make any sense at all. No sense at all.
It's the pivot, mate. It's the pivot. It's the pivot that everybody's waiting for. That's what they're anticipating, trying to get ahead of the pivot.
Can't see it.
No, I mean,
there yet.
No, I agree.
Not there yet.
Agree.
All right, have you got 5 minutes, mate, after the show?
Yeah.
Awesome. We'll catch up on Skype, and in the meantime, we're done.
We're done. Thanks to everybody in the room, as always. I don't know. I don't really want to encourage you guys to come on if you want, just to kind of have a chat. I mean, it's really sort of, we can all just sit here. We'll even send you a background. We can all just sit here having a chat about stuff. That's what this really is kind of turned into, almost like.
And why not? That's exactly what it should be. That's what it was meant to be. Yeah,
for sure. But have a good week anyway, guys. And if anybody does want to come on at some point, just let us know, and we will be sure to pass anything that you need to have powers wise to get on with us. And
you'll be tired on Monday, right?
What's that mean?
You'll be tired on Monday, right?
I will be tired on Monday. Yeah, I'll be in though. I'll be in on Monday. And then are we off during the barley week?
Yes, we are.
Okay.
Yep.
So next. Actually, I'm flying the following Thursday. So actually Monday's our last show for a bit.
Yes, probably will be. Yeah, that's what we chat about.
Yeah, okay. All right. No problem. All right, guys.
Set some homework. You got some homework for Gary, Ash?
Homework for Gary.
Questions without notice.
Questions without notice. What homework for Gary for when's he meant to present this?
Oh, Monday.
Yeah, maybe look into the news trading strategy and see what you can come up with. We
got the Euro. There you go.
Yeah, Euro coming out. How did you trade the Euro? How to approach the Euro dollar or the Euro pound actually at in an hour's time? There's your homework. And how did it work out?
Happy days. So there'll
Head
be
and shoulders
nobody
there
here
as
on
well,
Monday
mate.
because they won't have done that. All good. Right, mate. Thank you so much for being my trading buddy, and thank you guys for being our trading buddies. And we'll do it all again on Monday, as we said. It probably will be the last show for 10 days or so because of trading retreat. But we'll confirm that on Monday. Have a wonderful weekend, and we will see you then. Bye-bye for now. See ya. Where are these buttons? There they are.